Hey everyone, so you've really been digging into some serious market analysis lately, huh? Well, get ready because today we're going to help you cut through the noise and find those golden nuggets of insight.
That's right. We're doing a deep dive into a couple of key indicators that the pros use, the Mlen Summation Index and the Advanced Decline Line.
Okay, so let's start with this Mlen Summation Index. It sounds kind of complicated.
It's really not as complex as it sounds.
Okay, good.
Basically, it's all about measuring the breadth and the momentum of market movements.
So it's not just about whether stocks are going up or down, but how many are moving in that direction.
Exactly. Think of it like, say, you're at a concert, right?
Okay,
It's not just about how loud the music is, it's about how many people are actually up and dancing.
I like that.
The Mlen Summation Index is kind of like that. It tells us if the whole market is really feeling the music or if it's just a few folks in the front row.
That's a great analogy. So what's the Mlen Summation Index telling us about the market's mood right now?
Well, currently it's trending upwards.
Oh, that's interesting.
And not just by a little bit. It suggests there's some serious momentum building.
So does that mean we're looking at a potential bull market in the making?
Well, it's definitely a positive sign. It suggests that the market might be gearing up for a potential upswing.
Okay, but I'm guessing we shouldn't get ahead of ourselves just yet.
You got it.
One indicator alone doesn't tell the whole story.
You're absolutely right. We always want to look for confirmation from multiple sources.
Right, like getting a second opinion.
Exactly. And that's where our next key indicator comes in. The Advanced Decline Line, or ADL for short.
Well, let's talk about the ADL. What makes it so special?
Well, the ADL is kind of like a leading indicator.
Ooh, I like the sound of that.
It often gives us a heads up before we see major shifts in the market.
Interesting. How does it do that?
It looks at the difference between the number of stocks that are advancing versus the number declining each day.
Okay, so it's like taking the market's temperature.
Exactly. Is buying activity heating things up, or is selling pressure cooling things down?
And what's the ADL telling us about the current market temperature?
Right now, it's looking quite positive.
Okay, so no need for a market thermometer then. It sounds like things are heating up.
And here's the really interesting part. The ADL is moving in the same direction as the Mlen Summation Index.
So they're both telling a similar story.
Precisely. And that strengthens the case for a potential upward trend.
Wow, so we've got two bullish indicators flashing some pretty positive signals. This is starting to sound like a bull market symphony.
It's definitely an interesting development. But before we get too carried away, there's another crucial piece of the puzzle we need to consider.
Ooh, okay. I like where this is going. What else should we be paying attention to?
We need to talk about the S&P 500 support level, specifically the 5,400 mark.
Ah, support levels. Now, I know this is a term that can sometimes leave investors scratching their heads.
It can seem a bit technical.
Yeah, so before we dive into this 5,400 level, could you break down exactly what a support level is and why it matters so much?
Sure. Imagine a safety net below a trapeze artist.
Okay, I'm picturing it.
As long as the artist stays above the net, they can swing and perform confidently, right?
The net is there to catch them if they fall.
That net is their support.
I see. So in this case, the 5,400 level is like the safety net for the S&P 500.
Exactly. As long as the index remains above 5,400, it suggests a certain level of stability.
It's like a floor for the market.
Precisely.
But if it breaks through that floor,
That's when things could get a little shaky.
so we've got our bullish indicators, the Mlen Summation Index and the ADL, suggesting a potential upward trend. But we also have this crucial 5,400 support level on the S&P 500 that we need to keep a close eye on. It sounds like we're at a pivotal moment. What else do we need to consider as we try to decipher all of these signals?
You said it, a pivotal moment, especially with, well, the time of year. And
You're right, it's October, the
Mhm.
month of pumpkin spice lattes and, unfortunately, market jitters. Should we be worried about a roller coaster ride?
Well, October does have a bit of a reputation for, volatility.
That's
But hey, remember, volatility isn't always a bad thing.
That's a good point. So how should we be thinking about this October then, given everything we've talked about with like the bullish indicators, but also this support level? It's a lot to think about.
It is, but the key is context.
Okay.
While October can be a little, shall we say, unpredictable, the Mlen Summation Index and the ADL are both giving us those positive signals still.
Right.
And that suggests to me that the market's underlying strength could actually potentially offset some of the seasonal volatility.
It's like having a good engine in your car, even if you're driving on a bumpy road, right?
Exactly. Plus, there's another kind of interesting historical trend we got to factor in around this time.
Oh, really? Like what?
It's called the Halloween effect.
The Halloween effect. Okay, now you've got my attention. What is that?
So basically, the market tends to do better in the 6 months after Halloween, between October 31st and like the end of April, than it does in the 6 months leading up to it.
Wow, so it's like the market's own little Halloween treat.
You could say that. Now, of course, you know, past performance isn't a guarantee of future results or anything.
Right, of course.
But it's still an interesting thing to keep in mind as we go through all of this.
Okay, so taking everything into account, the Mlen Summation Index, the ADL, this 5,400 support level, and even the Halloween effect, what's like the main takeaway for someone trying to make sense of it all, it kind of feels like we're solving a really complicated equation or something.
I think that's a great way to put it. We are kind of connecting the dots here.
Okay.
Think of each indicator as like a piece of evidence.
Okay.
The Mlen Summation Index and the ADL are both pointing to that potential upward trend,
Great. Right.
suggesting that the market still has a bit of room to run.
And that room to run depends on the S&P 500 staying above that 5,400 level, right?
Exactly. As long as we're above that level, the outlook is, well, I'd say cautiously optimistic.
Cautiously optimistic, I like that. And what happens if the S&P 500 dips below 5,400? What could that signal?
Well, it could be a sign of a shift in sentiment. It might not necessarily mean a complete reversal of the trends we've been seeing,
Okay.
but it would definitely be something to, keep an eye on.
Yeah, for sure. So even when things are looking up, it's important to stay vigilant and be prepared for the unexpected.
Absolutely. The market is constantly changing.
Right.
Being informed and adaptable is really the key to navigating it successfully.
So it's like we're piecing together this puzzle, but some of the pieces might change on us.
You got it, a constantly moving target.
So what do we need to watch out for? What could throw this whole bullish outlook off course?
Well, we got to talk about, the big one, geopolitics.
Right.
Unexpected global events. They can really shake things up.
Yeah, those curveballs can definitely make things interesting.
They sure can.
So even with all the positive indicators, a geopolitical event could really change the game.
Absolutely. Investors get spooked. Things can get volatile.
Makes sense. Anything else we should be keeping an eye on?
Keep an eye on those interest rates.
Ah, yes, the Federal Reserve.
Exactly. Their decisions can really impact, how the market feels.
Right. Those announcements can feel like a plot twist sometimes.
For sure.
So basically, we need to stay informed and be ready to adapt.
Exactly. The market is, always changing, right? It's a fascinating thing to watch.
It really is. I feel like we've learned so much in this deep dive, going from, what is the Mlen Summation Index, to actually understanding how it all fits together.
And remember, it's not just about the indicators themselves, but what they're telling us about how the market's behaving.
Exactly. It's been great having you on the show today, breaking it all down.
My pleasure.
So to wrap things up for our listeners, we've learned about these two powerful indicators, the Mlen Summation Index and the advanced decline line, right?
Right.
Both hinting at a potential upward trend, but we also have to remember that 5,400 support level on the S&P 500.
A key level to watch.
And of course, we can't forget about those unexpected factors like geopolitics and interest rate changes.
Always be prepared for those curveballs, right?
Exactly. And with that in mind, we hope you feel better equipped to navigate those market shifts and make more informed investing decisions.
Absolutely.
Thanks again for joining us. Until next time.
Take care.